Traders, welcome back. Today is June the 4th, 2021, and so it is past time to review our results in the asymmetric trading system for the month of May. All right, let's get right into it. First of all, I have to say just how absolutely I am impressed with our system and the results that we're having. Even though, admittedly, for the month of May, we gave back a good portion of our profit over the month in just a 1 week period of time, but we were still able to beat the marketplace. If you're interested in checking out the program, there is a free link here that you can go to get a trial, 2-week free trial to check us out. That's plenty of time to see kind of how we work and what we do. But nevertheless, let's get into it. Let's talk about our results for the month. Remember, again, the asymmetric trading system, we're trying to take a risk-reward ratio of just 1 to 3. We're only risking $1 to make $3. It's very risk-focused, very risk management focused. It's automated trading. It is not a discretionary account. It's all mechanical in nature. We use a little accretive leverage. We use about 20% leverage in the program. That has helped us to beat the market over the inception till now date. Very low fees. We're trading stocks, generally speaking. And of course, we treat that in the Tastyworks account with no commissions, no fees. Works in both bullish and bearish markets. We've seen just a tidbit of how it can perform in bearish markets. I do not think, to date, in the program, we're 5 months in now, that we've ever had not one single bearish day in the marketplace where we haven't made money. So this program has really yet to shine because we've had a lot of bullishness this year, and we know that at some point that bearishness is going to come, and I think we'll be even more impressed with how the program performs. It is a focus on risk management and positive alpha returns. In other words, taking less risk than the market but getting better returns. We do use a small synthetic covered call position in several of our core positions to smooth out those returns and give us a little bit of a buffer. And we're able to go to all cash on volatile or uncertain days. We've done that actually just 2 days ago. We did a portion of that. And it gives us very little overnight risk. So a lot of cool things happening with the system. Let's look at our results for the month of May 2021. We had I had a $395 profit for the month on my $35,384 of starting capital for the month. That's a 1.1% return in 1 month. It's about 13.2% annualized out, APR. It was positive alpha once again. Remember that our dual fold mandate, and I just don't know if all of us really appreciate how difficult our dual fold mandate is. Number one, to beat the market returns, and number two, most important, to do it at less risk or less volatility. It's a challenge just in and of itself to beat the market. Very few money managers are able to do that, regardless of the risk that they take. But to do it at less risk is just an amazing goal. And we are right now on track and doing that very consistently. So we were positive alpha. We brought in a 1.1% positive return for the month versus about just a little over 0.5% for the S&P 500. We more than doubled. Now you say, 1.1% versus 0.55%. What's the big deal? Guys, it is a game of inches in the marketplace. It is a game of inches to just try to stay even with the market. And when we can double the market's return in a 1 month period of time, regardless of what that number is, we got to be pretty happy with that. 22 profitable days for us in our trading versus 6 losing days, and the market had 9 losing days. So again, a lot more stability, and averaged out about 68% less risk or volatility than the overall S&P 500. So again, meeting our dual mandates quite succinctly. You can see the day's results for my account every single day as we go through those. You can see that we got off to just an absolute gangbuster of a start, just absolute massive roll. It took us over a week to get our very first drawdown on the day, and that was okay because that came when we had a day with lots of rolls. We rolled the IYR, the SLB, and when we do rolls, it usually does result in a negative day. It sets us up well for the next coming week, but it does hurt us. This was an interesting day right here, March 11th and March 12th. Big jumps you can see there percentage-wise in the portfolio, and these were days that the market was down. We generally, again, we try to always outperform the marketplace, but it's a little tough to do that when you're trying to manage risk as your main focus. But it certainly comes to give us a nice result when the market is down. May 13th, very happy with that day because we had a heavy roll day. We rolled four positions there. Had a nice little jump here on May 18th. Again, the market was down and we were up in the AST program. Had a loss on May 19th because we did, again, roll. We rolled again here. And right here, this was really the undoing for us. This was sort of inconsequential this day, May 21st. Again, when we roll something, we kind of expect to have a little bit of a negative day. There's some costs and some slippage involved in that process. But this stretch right here, 4 days, I mean, obviously it's 5 days in a row of losses, but really 4 days right here are the ones that I'm focused on. And we just had bracket orders that just simply didn't work. So, we talk about risk management. We have core positions that we trade around. We also have bracket orders that we trade around where we're risking a 1% loss for a 3% potential gain. We didn't have any of these work during these 3 days, not a single one of them. Can you imagine setting up your trades, and not a single one of them works, and yet that's the minimal damage that we had right there. Because of that. And again, it is because we are very risk focused. May 27th, absolute disaster. We had 4 rolls that day, plus our bracket orders didn't work. I do believe, and I don't know percentage wise here what 419 drawdown is on about $36,000, but I do believe that's probably the biggest one day. Yeah, it may not be, but it's very close to the biggest one day drawdown that we've had in this entire system. So really one bad day in the entire month, and you can see the damage that it did. But we ended up at 35,779, and as we said, that gives us that positive result, a $395 profit, leaves us with a 1.1% return versus about half that of what the market did. There's the market's results, 0.55%. So just again, guys, just an awesome month. We met our dual mandate of beating the market's returns and doing it at less risk. You can see our results starting this year, January through May. We had kind of a stinky March. March just was not a great month for us, but we rebounded sharply in April, and it puts us again well ahead of the overall market. Overall stock market is up about 11.87%, and again we're talking about the S&P 500, versus our 16.14% total gain for the year, 5 months in. Still just kicking butt, guys. So again, if you are interested in being a part of our team, if you want to check out the asymmetric model portfolio, you got 2 weeks that you can jump in and enjoy it with us, watch it, and see how it develops, see how it ebbs and flows in the marketplace, and hey, maybe we'll get some down days here in the next couple of weeks, and you can see how it really performs when it is stress tested to the downside. But nevertheless, guys, there's your update for May. Another very successful week. Very happy with the program's results. Really ecstatic. So we will be back with you, obviously, at the end of this month, June, to check back in and see where we're at 6 months into the